All right. I think we are good and we are live. Let me quickly see this. We are live. We are live. See this. Great. All right. Hi, everybody. Good to have you on the call. Live. We are live. This. Great. All right. Hi, everybody. Good to have you on the call. Just a little technical issues. Give me a minute. We are live. Great. All right. Hi, everybody. Good to have you on the line. Just a little technical issues. Give me a minute. We are live. Sorry, guys. I had some technical issues. I just sorted this out. Let me quickly bring up the. Sorry, guys. I had some technical issues.
Hello, guys.
I was opened on two platforms. That's why. Sorry. Let me see if there's any feedback again before we go ahead. All right. I think it's better now. All right. Hi, everybody. I'm sorry for the technical issues, and also sorry for starting a little bit behind time. It's good to have everyone on the call today. And as we earlier announced, today's call is around Binance futures trading. We want to share some of the information around what futures trading is and how to, engage with the futures product. We also want to share some red flags when you're trying to play around with the futures product. We want you to understand what would result in liquidation, what results in you ending up in profits. So like we always say, Binance, we don't give financial advice, but for the purpose of education and for the purpose of the use of the product, we'd like to share some of the tips, to get started trading on Binance futures today. All right. So interestingly, we have a lot of people on the call, a lot of resource persons who are kind of like very excited to share some of their experiences as well as some of the processes they go through every day to engage and use the futures product. We are complete now. That's actually very interesting. So we have about 5 different key opinion leaders in the Africa space. I'll give them 30 seconds each to introduce themselves, and then we would go ahead to start the course for today. Before we go into introduction, I'd like to hint on the fact that we would have a special campaign / promotion for users who will be playing with the products for the first time, or for those who are going to be on the call till the end of the call. So stay tuned, and you'd hear the announcement by the end of this call. All right. So very quickly, I'll start with the first person on my screen. Priest, do you want to do a quick intro of yourself?
Please, am I audible? Can you guys hear me? Yeah. Okay.
Priest, can I hear you? I can't hear you.
Okay. Can you hear me now?
Okay, while Priest is fixing his mic, let's go ahead to Voski. Steven Voski, do you want to tell us about yourself?
Yeah.
Hi guys, good evening.
Can you hear me? Can you hear me?
Yes, yes, I can hear you.
Sure, we can.
Okay. My name is Stephen Bosky. I'm a crypto trader and the founder of Crypto Space Academy. Okay.
Great, great to
I'm
have
happy
you.
to be here today. Yeah, happy to be
Yeah,
here
so
today.
thank you so much. So you could hear Priest, right?
Yeah, I can hear him.
Okay, I think it was from my side. Priest, please go ahead.
Okay, good afternoon, guys. My name is El Priest. I'm a student of Ahmadu Bello University, veterinary medicine. I'm a crypto enthusiast, crypto trader, and I do product design on the side. Thank you.
Great stuff. Good to have you also, Priest. The next person on my screen is Amek. Do you want to introduce yourself?
Good afternoon, guys. So I'm Amek. I'm the founder of CS Family Ego Ambassador. I do trade, I do research, I do investments, basic stuff. I also teach people about crypto. That's all.
Cool stuff. Welcome, Amek. Next on the screen is Greatman.
All right, hello everyone. Good afternoon. Thanks to meet you, Ben, and it's nice getting to meet the Binance Nigerian community. My name is Greatman, and I'm presently a community volunteer at Bundle Africa, and I am a trader, basically trading cryptocurrencies, and the volatility indices market. And once again, I would say it's nice to meet the Nigerian community on Binance, and nice to meet you, Ben. Thank you.
Cool stuff. Good to meet you too, great man. We hope to hear some feedback from you today. Yes, last person but not the least on our conversation is OG Simpson.
Okay, guys. Good afternoon. My name OG Simpson, popularly called Gabriel. A crypto enthusiast, crypto ambassador, student of Benin State University, studying industrial chemistry. The co-founder CryptoFluent Academy, and also the CEO of quickbuy.com.ng, an e-commerce site and web app, so you can get all your stuff online from my app and sites. Great to be here. Thank you all for having me. Oh,
Ben is gone.
Ben, Ben has run away.
He should be back. I don't know.
I think his network is quite poor. Priest, in the meantime, the host giveaway now. Let's keep ourselves busy. All of you on glasses, just do giveaway.
Well, for who they wear glasses. Please wear your glasses now.
I know.
Yeah.
Someone should get across to Ben. Let's
He
know
just
what's
posted
up.
on the WhatsApp group that his system restarted. So that we should go ahead with introduction.
Okay,
So he said
yeah,
Voski. Oh, Voski has introduced.
oh. I think he means Voski should go as the first speaker or something. I don't know.
Let me.
Misunderstood. Oh, damn. I forgot.
Voski, I think it needs you to go ahead with the introduction, like the introduction of Binance futures trading.
All right. Okay. All right. While we wait for Ben to be back again, so basically, Binance Futures is it's about trading crypto pairs, but it's kind of different from spot trading. It's like predicting the price of assets, okay? Like predicting it and using a tool or a method called leverage. Okay, unlike sports where you just buy coins and hold and wait for them to increase. On sports, I mean on futures, you use leverage. Okay, there's something called leverage, which um it gives you more, like it's kind of quite different from sport. It gives you more, depending on the leverage you use, it gives you more gains, okay, on a particular asset you are trading, be it Bitcoin, Ethereum, or any other kind of asset. Yeah, so futures is quite easier. So yeah, I'll share my screen and then show you guys how to kind of set up your futures account, how to fund it, um, and I'll walk you through the interface, okay? I'll walk you through the interface of Binance Futures, how to adjust your leverage and all that. All right.
Mm-hmm.
Let's not let's not waste time while we wait for Ben. Okay. I'll wait for Ben to be back. Let's just be doing something. Okay. I believe anyone can see my screen now.
I can't see a screen from here.
I can't see it either.
You can't see my screen.
No.
Yeah.
No. I
Okay,
need to
but
update it first.
it shows me here that it's showing.
I think it's the
Is
I
that?
think Ben has to give you permission for that.
Okay, okay,
I think.
okay. Well,
Wait, can you
how
guys see
about
my screen?
Are you sharing
no?
your screen? Amek.
Yeah,
Yeah, I'm sharing my own now.
I think Ben has to give you permission for that because he's the one that hosted.
Oh.
okay.
Let me reach him on WhatsApp.
He said his system is restarting.
Wow.
Yeah. Okay. Great man too has gone off.
Um, well, I can't, I can't, I can't say much if I'm not sharing my screen.
I think we
Um,
wait for.
Mhm.
and I'm not supposed to take this introduction for someone else.
Priest too has gone online, offline.
Oh boy, it beats. But he should come back online. So. Wait, are we live yet?
Yeah, we're live. We're live.
Omo.
Okay, one, yeah.
Wow. Or maybe should I continue saying stuffs about futures?
Sure, sure. You
Yeah,
can
let's
continue.
continue going about
Everyone
features.
is
And please
quiet.
be teaching us one or two.
Okay. Cool. Good afternoon, guys. Sorry for the issues with Ben, with El Priest. I think they have issues with their PC. So, but basically, let's talk about Binance Futures. So, just like Voski mentioned, so Binance Futures is a form of trading in crypto. So, in crypto, we have spot trading, we have margin trade, and we have futures trading, right? So
Yeah.
spot trading is basically when you buy an asset I mean, you go to the market and you buy an asset, and basically, when that asset appreciates in value, you can decide to sell it and take some profits. Or if it depreciates in value, you can decide to buy more of that asset and wait for when it's probably going to go up in value. But that's the basic idea behind spot trading. But when it comes to futures trading now, it's quite different, because basically things like leverages come inside here. Like the market is an entirely different ball game. And to put it in perspective, you are not buying an asset. What you are actually buying when it comes to futures trading is a position. It's just like you are buying a financial instrument. That's the best word I think I can use to describe it. So it's not like you are buying asset. You are only buying you are just buying a price action, a financial instrument price action. So basically, in future, these financial instruments I'm referring to are called perpetual contracts, right? So these are it basically means you buy a price action in a certain perpetual contract, right? So that's how futures work. And the leverage I was talking about, I think there is some noise. Okay, the leverage I was talking about means when you want to buy an asset, you can basically, or not when you want to buy an asset, when you want to get into a position, you can actually get into that position with more money than you actually have in your, for example, futures account. Voski is going to show you guys how to fund your futures account. But after your futures account is being funded, then you can actually get into positions with more than the money you have, and that works through leverage. Now, what leverage basically means is, for example, if you want to trade and you want to use, let's say, a 5x leverage, that means you are using 5 times of your capital basically to trade. If you are using 10x, you are using 10 times. So like, and you can trade 125 up to 125x leverage in futures. Although I'm not going to advise you to trade with 125x leverage, because here's the thing, guys. The more your leverage, the more the risk that is going to be attached with your trading. So, especially when you are new to trading futures, it's very, very important for you to start off with, let me say, 3% leverage. That's why I do advise. Then, when you gradually, grasp how the market works, you can go on to 5x leverage and 10x leverage, right? So let's talk about the practical application of futures. I can't demonstrate, but basically, let's say you want to go into futures, you want to trade futures, right? And BTC is at, I think BTC is at, let's say, uh, what's BTC at? Okay, BTC is at around 7,000 right now. So let's say you are getting into a, oh, sorry guys. There's one thing I forgot to say. So basically, in futures, we have long position and short position. Right? I forgot to say that, which is very important. So long position is when you are entering a position and you expect the market to go up. You are bullish on the market. And short position is when you enter a position and basically you are expecting the market to go down, right? So, and how it works is, if you enter a long position and the market goes bearish, right? The prices start dropping down instead of going up, you are going to make losses. And in the same vein, if you enter a short position, which is you are expecting the market to come down, but it instead goes up, you are going to be making losses. So, but when basically you enter a short position and the market comes down, you would be making profit, and that's the advantage of futures. Even when the market is going down, when everything is declining, when we are bearish and all that, you can still make money in futures. So that's the basic idea. So a practical example now is, if you enter a futures position, let's say you want to go long right now. So if you are going long right now, BTC is at 47,500 or thereabouts. So if you are going long, you are expecting the price of BTC to potentially go up. So if BTC goes to, let's say, $55,000, then you are going to be making profits, right? But if BTC decides to, go down, like, decline in price, then you are going to be making losses. In the same vein, if you decide to enter a short position, which is you are expecting the market to go down, right, for you to make profit. If the market goes down, like if it declines according to your prediction, Ben is in the chat. If the market goes down according to your prediction, then you are going to be making profit. And if the market decides to go against your prediction, then you are going to be making losses. So you might have been wondering that how exactly do you how exactly do you trade futures? Because basically you need to have some Ben, should I stop?
Oh, please go ahead. Go ahead.
Okay, okay. So basically, if you are wondering how exactly can you trade futures and you have no idea how, because I've been saying you can predict the market should go up or the market should go down or decline or this or that, and there are definitely some indications you can use to know exactly what to do, right? So in crypto, there's what they call fundamental analysis and there's what we call technical analysis. So fundamental analysis basically is everything that has to do with news, the prospects, the information, and basically everything from that's why it's called fundamental analysis. All the fundamentals around a certain cryptocurrency or a certain crypto project or something like that. So that's what we call fundamental analysis, right? So and you can use this fundamental analysis to your advantage, either to possibly, like for example, if for example let's say let's say something really good is about to happen to BTC, let's say in 1 month's time or in 2 months time, then it's a good idea for you to buy BTC even if it's declining, because that good news that is going to come in 1 month's time or 2 months time would make the market go bullish, and basically you can you can make money when the market does go up. In the same vein, the crypto market is a volatile market. Prices also decline, and there are also bad news, right? So if you envisage that there is going to be or there are going to be some bad news, let's say in a week time or in some days time or something like that, you can also decide to enter a short position and stuff like that. So basically, technical analysis in the same vein is technical analysis is reading of charts, reading and analysis of charts actually. So you would need to learn about how to read charts and stuff like that. If you don't know how to do technical analysis, you can easily go on YouTube and you search introduction to technical analysis. There are tons and tons of free videos that could teach you technical analysis. You can see support lines and resistance and all that, and you can use it to determine how the market will possibly move and which position you should get into particularly. So that's just a rough idea of what futures is. Back
Yeah,
to you,
yeah.
Ben.
Thank you so much, guys. And I'm really going to have to apologize again. My system just tripped off in the middle of the call, and I had to restart. So it took me some time, right? I'm very certain that the speakers have laid some foundation around what futures trading is. I think I overheard Amek talking about futures trading as to how it relates to predictions, right? Does anybody want to add from their own experience or from their point of view, in simple terms, what futures trading is? Great man, do you want to do a quick summary of what futures trading is?
All right. Mr. Ahmed did justice to explaining what futures is. From looking at a simplified perspective. Now, futures is basically an agreement to buy or sell a commodity, or other instrument, at a specified time. Now, we should understand that what when you're trading futures, what you're actually buying is not yours. Unlike, for example, now sports, whereby you can buy, BNB. Let's say you're trading BNB USDT pair in the spot market. You basically have, when the trade is executed, you have BNB in your spot wallet, but it's different from futures. You're actually buying a contract that is not yours. You get to hold for a period of time, as long as you want. You get, because definitely there will be an expiry date. You get, so the futures market actually comes with a whole lot of advantages and privileges that you may not get while trading the spot market. For example, the futures market comes with leverage, trying to use the little you have to leverage on much on the market. You get there are several there are several privileges that trading the futures market comes with. And I will tell people trading the futures market is the approach you give to trading the futures market is not the same approach you would give to trading the spot market. You get I'll basically say that the futures market is not basically for investors. If you're an investor, the futures market is not for you. We have the investors and we have the traders. You get, the investors are those that will just buy a particular asset and maybe hold it for, a year plus. And, but the futures market is basically for traders. You get, there's a whole lot of work you do before you get into the futures market, talking about analysis, basically technical analysis. You get, I wouldn't really recommend fundamental analysis because that has to do with just news. You get, trading the futures market on news can be very risky. So, unlike the futures market, there's a whole lot to do with the futures market. There's a whole lot of terminologies. I believe we'll be going in.
Okay, let me stop you there. Let me stop you there, great man. I believe you said quite a whole lot, and you landed and at a very good point that speaks about the risk around trading. Can you guys hear me?
Okay.
Yeah, now.
Okay, sure. I was saying that there are like risks around trading cryptocurrencies in general, not necessarily futures trading alone. And the risk around trading cryptocurrencies associates to the volatility of the trade and the coins, the fact that prices can go up quickly and go down in the same speed. So generally, trading in its own or trading as a whole is a risky endeavor. That's why we advise people to, take due diligence, understand the trading investments or trading calls you intend to make. Do your own research before you take those actions, especially in fact, on any platform, so that you don't have a situation where you have gotten your fingers burnt. So I think we've gotten an overview of what futures trading is. It's kind of like prediction of price movement, the direction of price, whether upward or downward. The interesting thing I'm hoping that the speakers today would mention is that futures trading is you can profit upward or you can profit downward. You can profit in both ways. So it's not dependent on buying low and selling high. Sometimes you can profit when you sell a coin and you can profit when you buy a coin. The summary here is if you predict the correct direction of that particular pair, then you stand to gain, whether up or down. All right, so I think we should run through a few other details around futures trading. Have we shown users who do not know how to set up their futures trading account? Voski, do you want to run through that very quickly to show our users how to set up their futures trading account?
Okay. Well, I have only one Binance account now, and it's already set up. So I don't know how that is going to be, like showing how to register again and all that. And
just do a summary. Do a summary.
Okay. All right. So setting up your futures account is quite easy. Okay. It's quite easy. You just need to go. Once you go to your account. Can you see my screen now?
Yeah, sure.
Okay. So this is my account. Okay. Let me exit the futures section. Okay. Let's say you already signed up. You have your Binance account. Okay. Now you have to you have to create a futures account separately. Okay, because once you register, you are given your spot accounts. Okay, then once to set up your futures account, you need to go to the futures sections under derivatives. Okay, USDT futures, and click it. It will show you to activate. Mine is already activated, so I can't go through the process all over again. You answer 10 questions. There are 10 questions you answer, and then you now start trading. Okay, it's for now. For you to start trading, you need to fund your futures account. You need to fund it, and to do that, you need to at least deposit USDT into your spot account. Okay, you need to deposit USDT into your spot. Let me go to my spot. Okay, wallets. Okay, fiat and spot. Now when you go to your spot, you must have USDT, right? You must have USDT in your account. Okay, you must have USDT. Okay, yeah. Now if you transfer. Okay, you use transfer to move USDT from your spot account to your futures account. Okay, it has to be here, USDM futures. All right. Now after selecting fiat and spot to futures, you select the coin USDT. Okay, select the coin itself and just type it at USDT. And currently I just have 2 USDT here, so I'm going to transfer everything now. Select max, or you can just input the amount you want to transfer and confirm. Okay, now I've funded my transfer successful. You can see that I've funded my futures account. Okay, if I come to my futures section now, I will see my entire balance. I will see that USDT. Okay, I will see that USDT in my balance here. All right, so that is just it about funding. Okay, about funding. Now to place a trade, you need to go back to the derivatives and then go to USDM futures. Okay, go to USDM futures and start making trade. Okay, now there are several ways you can place a trade on futures. Okay, there are 2 different ways. You can use the cross margin or the isolated margin. Okay, and then the difference is that if you use hello, can you
I
hear
was going
me?
to ask you to state the difference between cross and isolated margin.
Okay. I'm coming to that. Cross and isolated margin, it means I can trade. I'm going to place a trade, so I'll show you the difference. Okay, so let's say this is BTC USD pair. Okay, so let's say I want to place a trade, and this is the current price of BTC now, 47,430. Okay, and let's say I want to use 50% of my balance. Okay, currently I have 19.4 USDT balance here. So let's say I want to use half of it. Yeah, let's say I want to use half of it. Sorry, hold on. Okay. So let's say I want to use half of it, and it's going to show me the total cost here. Okay, the total cost with half of my balance, which was 12 USDT, will be 6.29, and then I'll place this trade. If I place this trade using isolated isolated margin. It means that the only amount or the only amount of money that will be used for that particular trade is the the amount I assigned to it, which is this cost, this $6.29. That is what will be used for that trade. Okay, that means if the trade is is solely based on just the amount dedicated to that particular trade. But if
Let
I
me come in
decide
there.
to
Let me come
use,
in there.
yeah,
So what you're saying, in essence, is that if we enter an isolated trade,
mm,
um, only the amount that we intend to use for that trade will be
use,
spent, will be used.
yes,
That's
yes,
to say, if we have $20 in our account and we enter an isolated trade, 50% of our account, only like $10 will be used, right?
$10 to be used, yes, exactly.
Great. In the other sense, the cross trade. Can you explain about the cross trade? Let me see before you use the illustration on your screen. Let me see
Yeah.
if El Priest, can you touch a little on what cross margin is? El Priest, are you there? Can you hear me now?
Yeah,
I was saying, can you touch a little on what cross
please,
margin
can
is?
you repeat the question?
Yes. So we are looking at isolated and cross trade margins on the Binance Futures trade, right? And we've established that isolated trading involves only the specific amount you intend to use to enter into a trade. We want to know your interpretation of cross trade and what it implies. Can you hear me? Oh, it seems he's having some issues. Amek, do you want to jump in on that very quickly?
Yeah, it's fine. So basically, let me see if I can share my screen. Uh,
Yeah, sure.
My network is very, very bad. It's just going
okay.
on and off.
Basically, cross margin is very simple. Cross margin means all the positions you enter, right? If you enter 5 positions, for example, all of them are going to depend on your margin balance, which is your your futures balance, right? So, but in the case of isolated margin mode, you can allocate various margin balances to each trade. Like, for example, you can isolate and what do they call it? You can isolate and maybe um provide just $100 as the balance
Mhm.
for as the balance that a certain trade is going to depend on, and another one you can put it, let's say, just $50. Another one you can put it, let's say, maybe $80. And the advantage of this is, in the case where the trade goes against you, and like, you are going to be basically losing on that position, you are not going to be losing your entire margin balance. You are only going to be losing that amount that you allocated for that specific trade. But
Yeah.
when it comes to cost margin, if you enter 5 trades and even just one of those trades go against you, because it's depending on that your singular margin balance, just a singular margin balance. I mean, all your positions are depending on the same balance. Once the trade goes against you and it reaches your liquidation point, all your money is going to be gone. So isolated margin mode is a mode that helps you mitigate your it helps you manage your risk, right? So if you don't want to be exposed to losing, basically all your money, then isolated margin mode is a good one to use. But it also has disadvantages, in the sense that for example, if you have $1,000 in your account and you allocate only $100 to a certain trade, then that trade is not going to have enough balance to keep it going if the trade goes against you. If you start trading futures, then basically you are going to get it. You are going to get what I'm saying at the end of the day.
Mhm.
you're
Mhm.
also listening very well in this class or in this session, you're also going to get a good idea of how futures work.
Great, great. So I think we want to go back to Voski now. Voski is going to show us how to use the cross margin to place his trade. Voski, you can go ahead and share your screen now.
Okay, so
Yeah.
um, okay, so basically this is okay. This I said this isolated and this cross. Cross involves you using your entire balance for that trade, okay? Using your entire balance. Let's say since my balance is like 12 USD and then I use 6 USD for a trade, the remaining 6 USD will be there, but it will serve as a hedge in case if my trade goes wrong and start going down. It will help increase my it will help increase my like my liber or it will help like bring down the liquidation price, okay, to like make it far. And then but in a situation where there are highly volatile markets, your whole account can be wiped in situations like that, okay, because it's going to take everything. Because there won't be enough maintenance margin anymore. Okay, it's called the balance is called maintenance margin. So
Wow.
so
Okay.
I
So show us how
will
to place trades using the
okay.
cross.
Okay. Using cross or isolated, or probably both of
Cross.
them.
Cross.
Okay. So, first of all, I'll come to this side, okay? Click here and then select cross and confirm. Now I'm on cross leverage, okay? So, okay, what price am I buying at? Let's say I'm buying, the current price is 43,380 for one Bitcoin. So let me just buy at market price, okay? Let me just open the trade and then and explain the trade itself, okay?
Mm-hmm.
Let me buy at market price, okay? Using my balance, okay? So I've placed a buy order using cross leverage, okay? Now, if you come down here, you can see the trade I just placed now. I use 10x. Okay, now 10x is leverage. Okay, these things here are what are the leverage numbers, okay, from 1x to 125x. Okay, now I use 10x. Now what this means is that if let's say BTC goes up by 1% today, I'll be making 10% on this trade. Okay, in contrary to what you get in spot. Or normally on a spot, if BTC goes by 10%, you only make 10% of your capital. So like I used $10 on this trade now. If BTC goes up 10%, I'll be making 100% on this trade, which is another $10. But on spot, if business goes by 10%, you're making that same 10%, which is $1 on this trade. Okay, so it's quite easy to calculate using 10x. All right, but you can if you want to use 25x, 50x, the same calculation, the same initiative, idea, and terminology applies. Okay, it just times your numbers by the leverage you used. All right, so I'm using 10x here. Okay, cross leverage, and I've placed my trade. Okay, so this is my trade. Okay, this is the leverage here, 10x, and this is my capital. Observe here now, this is my capital, 9.47 USDT using cross margin, right? Now, you can see here that it shows 94.7 USDT. That's to show you that I used 10x. So it allows me, just like Amek explained, okay, it just allows you to trade with what is more than your balance, okay? So since I use 10x on this trade, it automatically means that I used $94.7 on this trade instead of 9. $47 here. Okay, so the leverage has made me, it has increased my capital in a way. And if this trade goes right, BTC moves up by like 10% today, I'll be making 100% from this trade. I'll be making 100% on this trade. Okay, which is 94.6 dollars.
Wow.
Okay. Yeah, yeah.
Makes sense. So I know, guys, please, you have to permit us. All the guys on this call are they are like experts, so they might not necessarily explain from the bottom to top, right? But you have to explain. I know we are supposed to have explained all of the figures on this interface to you, but that's what we did in the intro, where we said that buying long on futures means predicting that the price of the selected pair will go up, and then selling short on futures means predicting that the price of the selected pair will go down, right? So that's what we are trying to show you on the interface. The futures interface is something similar to the spot exchange interface, no doubt. The only difference here is that your predictions is just like doing what you do on other platforms, the call and the put, right? Your predictions might not necessarily be affected immediately. Like he used the market's order to place an immediate trade, but you can predict from a point. You can use some certain tools to predict the direction of the market. Now, futures is actually very interesting, not necessarily because of the profits you would make, but because of the mindset around futures trading and all of that. So people keep asking that when Binance sends liquidation letter to them via mails, who is benefiting from this liquidation? Like, there's a lot of misconception around how I lost some money yesterday to Binance. People think the money they lose is given to Binance, or Binance is making profit off of their losses. So we are going to take you guys on in the next few minutes the risks involved in futures trading, how to mitigate the risks that are involved, and how to some people will set up a paid masterclass for this information that we're about to share, but how to set up liquidation free trades. That's to say, whether or not the price goes in the direction that you predict, you are not bound to be exited from the market. I'm certain that these guys here would have no issues sharing this information with you. So I expect that we stick around and be a part of this information. Before we even get to that point, I mentioned earlier on the call that we have a campaign where we'll be giving out $2,000 to cash back, actually, to users who will participate. So we would share that at the end of the call. Do well to stay till the end. Anyways, let's go ahead to the liquidation part. This is kind of the part. This is like the part where people suffer a whole lot. A lot of people get frustrated out of trading futures, not even necessarily on Binance, wherever they engage to trade futures. A lot of people have issues where they calculated wrongly, and then the positions have gone against them. What do you look out to? I'll start with Simpson. What do you look out for when you are trading futures? And then great man, you prepare to take us on at what point will your trade be liquidated on Binance futures? Let me just assign the questions to you so that once we go, it will be a stretch. Amek, you tell us how to avoid futures liquidation, and you would also demonstrate to us how to avoid futures liquidation. So let's start with great man, Simpson. Let's start with Simpson. What do you look out for when you want to trade futures, and what is futures liquidation? What are you looking out for in that particular niche, and then how to prevent futures liquidation?
Okay. Good afternoon once again, guys. What I look out for when I trade futures, basically, there are different strategies I use, right? So each person to their own strategy. So I'm going to share quite a few strategies I use here when I trade futures. First, basically, before you trade futures, you must at least have a good knowledge of price action. You must have some background on technical analysis, right? Trading futures strictly on fundamentals could help, but not in all cases, as we could see recently. That didn't play out well. See the news of El Salvador, see the news of Ukraine also, and prices really when such news come up, we expect prices to move in our direction, right? But what we saw is instead of price to move in our direction, price made a little move towards our direction and then moved back downwards. But then using technical analysis, you would always see that what this showed on the charts, right? So I'm going to share my screen and give you an overview, quite a breakdown, right, of how this goes around. Sorry, can you see my screen? Please indicate. Let me know if you can see my screen. Can you see my screen?
Not yet.
Okay, can you see my screen now?
Just click on the share button and we would be able to display.
Yeah, I've done that.
Nope, we
I'm
cannot.
sharing. Oh well, I think I should just talk about it
Or maybe,
because it's
okay, we can
yeah.
still see it. Maybe just talk about it and then maybe some other person would share a screen.
Yeah, I'll talk about it then. And probably great man, you'd share your screen and you'd talk more on that. So basically, what I look out for is I use support, I use resistance, right? And talking of support and resistance, there's this popular belief out there that support is a price, right? And resistance is supposed to be a price, right? But for me, I look at it as a zone, right? That's how I play safe. I play my support as a zone, I play my resistance as a zone. So such way I can snipe into the market and snipe out. I call it a sniper entry. Now I see price action, right? I see price going against me, right? Now I use Bollinger Bands, I use EMA, exponential moving average, and basically I use trend lines, right? And Fibonacci retracement tool. But I'm just going to talk about my support and resistance. Basically, since I can't share my screen because of some issue with my laptop that I don't know. So what I look for is now price goes against us, right? First row is I trade bounces, right? When I draw my lines, I draw my support lines. I set price using a limit order. So when price comes down to where I've seen that, okay, this is my support zone, right? So anywhere within that zone is a buy zone for me, right?
Mm.
So I am opening a long position within that zone. That's a support zone for me. So once price comes in there, naturally, price is supposed to do what? We are supposed to have a bounce, right? Price picks liquidity. By liquidity, I mean liquidity simply means there is a lot of buy orders that have been placed there. That's what makes it a support zone. A support zone is clearly a demand zone. Demands mean I want to buy. And a resistance zone is a supply zone where there's a lot of sell orders. So what I do is I set my price within that support zone where there's a lot of buy orders. So when price comes, right, the buy orders activate, and then we sorry, did
Go
someone say
ahead.
something? Yeah, then we
No, no,
get,
no.
so that's
Go
what I
ahead.
trade. That's why I trade, right? So that's how I'm able to trade my futures. Then I set my take profit at the zone where I see that, okay, within this zone, right, there is going to be a resistance because of what? Former action. Not forgetting that price action what is trading the markets based on past events, yeah. And candlesticks basically are a representation of human emotions, right? And what happened in the market over time. So you see that within this zone a lot of people sold. So when prices are getting to that zone, still these are human beings still trading, still buying and selling the market. So when prices get to that zone, you're going to see huge sell order, because people expect humans to still act the same way over time, right? So you get a resistance there. So this way, I'm able to scale in and out of the market without even getting a liquidation notice, right? And then sometimes, right, sometimes liquidity might be cleared in your support zone, but then you don't know if you're going to bounce or you're going to break. So what do you do in a situation like that, right? That you
Mm.
prevent yourself from losing funds. Yeah, I set a
I,
stop
I, I'm
loss.
I'm scared. I'm scared of your strategy. Why? Because like you
Okay.
said, you trade in the opposite direction of the markets. I wish your screen would allow us to see this strategy. I
Right,
love the
right.
strategy, because maybe we want to look a little further into what support and resistance is.
Resistance means.
Um, Great man, please share your screen and show us, what support and resistance,
Resistance,
how it
yeah, yeah.
works, how it is visible, and where to take order. Do you get it? Because if I allow, Simpson he already understands what he's doing. So for me that don't know, I want to
So,
see. So
okay, yeah, yeah. You would
try,
like to
try
see
to
what I'm
share your
doing.
screen. Great man, can you share your screen?
All right. Thank you, Ben. Thank you, Simpson. All right. So, support and resistance. But first of all, I would say, before you trade
Are
the
you
futures
sharing
market,
your screen?
um, yeah.
Please share your screen.
All right.
Can you
Aha.
see my screen now?
Now I can see your screen.
So,
Okay,
can you see
Well,
my
okay.
let's
screen?
let's
Thank you very
let's
much.
let's go on
Yeah.
with let's go on with great man first. We'll come back to you,
Okay,
OG.
okay, okay.
So,
Let me
All
sorry.
unshare
right,
Can
go
you
this
see my
again.
ahead.
screen?
Yes, we can see
Sure.
your screen.
All right. So, basically, there are basically some tools you would need to have at the back of your mind when trading the futures market. You don't just jump into the market.
Switch over to
You don't.
your Binance. Fine, fine.
All right. So you don't just jump into the market. You don't just
Mhm.
jump into the market when trading the futures. Now, this is my future screen, and I'll basically be talking about support and resistance. Now, one of those tools you will need to. There are actually so many tools. There are so many of them. We have the support and resistance. You have the supply and demand zones. We have the Japanese candlestick technique patterns. There are so many of them. Volume price analysis. But I'll basically be talking about support and resistance. Okay. So, all right, this is my chart. I'll basically want to do it in a full screen. So basically, what is support and resistance? Now, support is basically a level. Support is basically a level at which the price of a crypto asset tends to find a demand pressure that would be strong enough to stop or revise the price from falling. Let's say, for example, now Bitcoin is falling and it gets to a particular level, it reverses. It has actually gotten to a support level. On the other hand, resistance on the other hand is a level where the price of a crypto asset tends to find supply pressure that would be strong enough to stop or reverse its price from moving upwards in an uptrending market. Now, I always say it's dangerous for you to long the market on a resistance level that has not been broken and retested. You're opening a long position while the market is actually close to a resistance level is risky. You might get liquidated because that resistance level might hold and send the price downwards. And also, opening a short position on a support level that has not been tested before is risky. Because you have no idea the support level will hold and the market will move upwards, and your short position probably might actually get liquidated, or you might actually make some losses. So it's very good you identify these levels on the market and know when to when to long the market and when to sell the market. Like I said, you're only meant to long the market on a support level, you get, and on a verified support level, because most times the support level might be tested and it breaks. That's where we now come into break and retest, price action, Japanese candlestick patterns, and a whole lot of other techniques, Fibonacci retracement. So let me not go to, but just have it at the back of your mind that you do not long the market on a resistance level and you do not short the market on a support level. You long the market on a support level and you short the market on a resistance level. Are you with me now? All right, so I'll actually proceed to. Sorry, please. Am I being followed? Let me get the
Yes,
response. Oh,
I get you, but let's use lines to indicate these levels so that everybody
all right.
understands. So use the line to
Exactly. Now,
start with the support level.
all right. Okay. Basically, I used horizontal lines to denote my support and resistance level, and there are basically different ways to actually draw the support and resistance level. But I'll actually be showing you a very simple way to draw these levels, to spot this level. And all right. So first of all, this is actually a candlestick chart. First of all, I actually go to the line chart so I can be able to see my areas of indecision you get from traders. So this is my line chart. Like we have the candlestick chart and the candles, the bars, the line, and all that. But I won't be going into that. So I basically go to my line chart. Now this is on a 1 day time frame. You get I'll actually be starting with the 1 day time frame. You get we have the 1 day time frame. This time frame shows us the various activities of price action that happened within that time frame. Now, if I move into a 4 hour time, I'll get more details, but this is just the 24-hour time frame, which is the 1 day. All right, so I pull out my horizontal line. I actually have it favorited. So this is my horizontal line. Now, what I will do is this is my horizontal line. Okay, let me make the color black. Now, I want to draw my support and resistance level. Now, what I'll do is I'll actually look out for those areas, those past areas that have areas of indecision where the market actually got to and went upwards, or where the market actually went to and went downwards. Now, let's say for example, now I would actually take this. I would actually drop my line here. Why? Because now when you look at this, at this point, this line at this point, it acted as a resistance. Can you see this?
Yeah, sure.
It acted as a resistance here. Price came here and we saw how it fell. At this point, price, we see how it acted as a support. It also came here, acted as a support. Then at this point, we see how price also came here and it acted as a resistance. And now we can see how price is presently trying to act as a resistance at this particular point. Are you with me now? So now the idea is you have to bring out your line and look for areas where price has made areas of actually for areas of indecision levels where price. Now remember that for this line to be valid, let me just pull out something. For this line to be valid, let me just draw this line for example. For your line to be valid as a support and resistance line, it must act as a support and also as a resistance. For example, it must act as a support and also a resistance in the past time. Now, if you have something like this, now this is valid. If you have something like this only, this is not valid. Also, if you have something like this, now this is just acting as a support. If you have something like this, this is not valid. Like I said, it must act as a support and also as a resistance for this line to be valid, to be taken as, either a support or a resistance line. All right. So let me take.
Great man. I like what you have done here. You have gone a step further to not just show us support and resistance positions via the candlestick pattern, but you have used the line pattern to show us support and resistance. So I'm looking for a sharp V that touches a horizontal line to know my support.
Yes,
and I'm looking for a sharp, kind of like a sharp A, incomplete A, to know my resistance, right?
Yes, exactly. But also have it at the back of your mind that most times when you try to draw out your support and resistance level, most times you might have a gap. Sometimes you might have something like this. You get, and have something like this.
So that is why it is called a region. It doesn't have to be a point. That's why it is called a region of support and resistance. So I think the interpretation that you have given is best. But once we have a particular region that you see those kind of repetition, we can
Okay.
identify that as it doesn't have to be a point, right? So I get that. I get that. So now let's take a step forward, to examine at what point do I get liquidated, and how I think I've seen that question in the comments. How
Okay.
do I prevent liquidation? I know a lot of people would pay others to get the knowledge around zero liquidation. In Binance, it's possible to set your trade and have zero liquidation. I
Sure,
want
sure, sure, sure.
I want Amek to share his screen and show
Okay,
us
I won't be doing
how to
that.
set zero liquidation on Binance. Amek, are you good to go? You are muted.
Yeah, I'm sharing my screen.
All right, cool.
Can
Yeah,
you see
we
my
can see
screen?
it.
Can you still see it?
Yes, we can see it now.
It's the Binance interface, right?
Yes, please go ahead.
Okay. So basically, this is the Binance interface. You guys should be very familiar with it. This is the perpetual contracts we are trading. I saw a question like that where someone was asking if futures is the same thing with perpetual contracts. So futures is a type of trading in crypto, and basically what you are trading in futures is perpetual contracts. So we have various perpetual contracts. We have BTC to peer to USD perpetual contract, and you can see there are a whole lot of contracts here. So it's not like you are trading an asset, you are trading a contract, which is, in other words, also a financial instrument. So basically, how to avoid liquidation, because that's very important. Like I mentioned earlier, the main tips to avoid liquidation, in my own opinion, is by not doing things like trading or using very very high leverages, right? So if you don't really know what you are doing yet and you use a high leverage, you are at high risk of getting liquidated, right? So and another thing is the way the Binance algorithm, not Binance particularly, the way futures algorithm works in general. The higher your risk, the higher your exposure to liquidation. So while trading futures, try to always try to always know what you are doing and just like stay away from exposing yourself to too much risk. Obviously, futures come with some risk, but you still have to limit those risks as much as possible, right? So how to avoid liquidation, right? You have to come here. If you are on mobile, you might have to click the three dots on your mobile phone to see this. But if you are on desktop, like I'm on desktop right now, you'll see it's this tiny little icon here. It's not so tiny, but tiny anyway. So it looks like a calculator. It's with some keypads or something. So you click on that, and it pops up the calculator, right? So the calculator is very, very helpful in, not only helping you avoid liquidation. The calculator is also a tool I recommend for newbies because it gives you an idea of what you are doing basically. It doesn't predict exactly what is going to happen, but it gives you an idea and a pretty solid idea. So if you have an idea of what you are doing, it's just like a flight simulation, right? So if you, I'm not saying you should go and fly an aircraft without without going to without learning how to, but I mean basically this calculator is going to give you an insight into what your trade is going to look like, the profit margin and stuff like that. For example, the first tool on the calculator is the sorry okay, the first tool on the calculator is the PNL, right, which is the profit or loss. If you want to calculate the profit or loss you would potentially make on a certain trade. Ben, should I explain all this one before I go into the how to avoid liquidation?
I want you not to exceed 5 minutes. So take
Okay, okay,
take your time, manage your time properly, and explain all of
okay.
the calculator.
I'll be very quick. So basically, if you want to calculate your profit or loss, right? So you can see here you have long and short, right? So you can decide if you are going long, then you just leave it on long, and if you are going short, you can select short. this doesn't mean your trade is actually happening. It's just giving you an idea, right? So if you click on long, for example, you can see the leverage also here. If you're a newbie, I always advise not to use 10x leverage like Voski did, right? You have no business there. Try to get a concrete understanding of how the market works before you do that. So you can use something like 3x leverage or 5x leverage to start with when you start trading. So I'm going to be using 5x for this example, right? So BTC right now is at 47,500. So let's say I'm getting into BTC at 47,500, right? So and my exit price, so let's say I'm planning on going off, like I'm planning on taking profits, right? I'm planning on exiting that my position at, let's say, when BTC gets to $50,000. Just an example, guys, right? So and for the quantity, let's say I'm trading 0.005 BTC, right? So basically, what happens here is I can simply click on calculate, and when I click on calculate, it shows me the profits I'm going to be making, right? If I enter this trade, and it also shows me the loss I'm going to be making, because this PNL here means I either make a profit of $12.5 if BTC goes to 50,000, or if BTC doesn't go to 50,000 and it goes down to, let's say, 45,000, which is a 2,500 difference in the price, I'm going to be making a loss of 12.5 dollars, right? So it also shows you the margin you are going to use for that trade and all that. The same thing for a short position. All you have to do is input the variables and simply calculate the profit or loss on your trade. So target price, I'm not going to be explaining this that much. So target price is basically if you want to calculate how much, like for example, if your entry price is let's say 47,500, which is around the current price of BTC, right? So and you want to see how much profit, like you want to see the price BTC will get to for you to make a certain return. For example, if you want to make 50% return, you can simply calculate that, and you can see that for you to make a 50% profit, um BTC has to get to 48,687. So it gives you an idea of how much you'll be making if you enter a certain trade. So, like I said, the calculator gives you a concrete idea, not concrete, not that concrete, but it gives you at least a good idea of what you are going to be doing, what your trade is going to look like, and you are not just entering the market blindly. So the main thing now, liquidation price. In liquidation price, you can also set whether you want to enter a cross, whether you want to use a cross margin mode or the isolated margin mode. If you want to use the one-way mode, long, short, all the variables are there. I'm going to reduce this to, let's say, 11x, right? So basically, this helps you in the sense that, let's say you want to go into BTC at 47,500, right? And the quantity is, let's say, let's still use 0.005. No, let's use 0.01 for this, right? So, and this balance refers to how much balance you have in your futures account. So let's say you have a balance of only let's see, let's use $100 at first. So if you calculate that, you will see that if you have a balance of $100, you enter a position with 0.0050 at 11x leverage. You are going to get liquidated when the price of BTC declines to 37,650. One other thing I would like to note, I would like you guys to notice, this is just a rough estimate. And in most cases, when the price of BTC is really, really volatile, or not BTC in general, whatever perpetual contract you are trading, if let's say BTC is at 47,500 right now, and we see a decline to, let's say, 40,000, you can actually get liquidated, which is why I'm saying that this calculator doesn't give you an exact figure you are going to get liquidated. It only gives you an idea. So, for example, if you want to enter this trade, then you shouldn't, or you should reduce the quantity of BTC you are using to enter the trade to lower your risk, reduce the leverage as well. And one thing that always helps is to actually increase your balance. So so that your liquidation point will be far from your the mark price. The mark price is the average price of, like, or an average price of an asset over a lot of exchanges, right? So for example, let's say I have $200. Sorry. let's say I have a balance of $200. Let's even assume I'm entering the position with same 0.01 BTC. If I'm to calculate that, you can see that your liquidation price goes lower, right? So the balance in your account is very, very important. If you are entering a position with $50, then you're at higher risk of liquidation, especially if you are entering with, a huge quantity. So let's say, for example, I am entering this position with $500, right? So if I'm entering this position with $500, this is the quantity of BTC I'm using to enter the position. I wouldn't have a liquidation price at all. It's not even about the market going against me. I basically don't have a liquidation price because my margin balance is sufficient enough to keep that trading going for as long as required. Not as long as required. It would be really, really not nice for BTC to continue dumping and dumping. But even if you are going to get liquidated with such a trade like this, BTC will basically have to go from, let's say, 47,000 to maybe 25,000, in which case you will now have a liquidation price. And basically, it's either you fund your account with more balance, like with more USDT, or you decide to exit the position and you will not be getting liquidated. You take your losses, basically, right? So that's how to avoid liquidation. You reduce your leverage, you also reduce the quantity, and you ensure that your balance is enough to basically keep the fund the, because basically if you have a small balance, it's not going to be able to cater for the position you are going to be going into. Then I also explained that when you are using the cross margin mode, it's very risky if you are entering a lot of positions, because all those positions are going to determine on a singular margin balance. So it doesn't matter if two of your trades are doing well, but five others are doing not well, you can get liquidated. Or even if two trades are doing well, but the profit margins are very, very low, and let's say even just one trade is not doing well, and it's really going against you, you can also get liquidated once the one that is not doing well actually gets liquidated, right? So if you want to limit your risks further, you can also select isolated margin mode. The only disadvantage is that you would not be able to allocate your entire balance to, because basically you have to open, maybe if you want to open three trades, you have to share your margin balance between each position, right? So that's the basics on how to avoid liquidation on Binance. You either you and here's also another thing. Let's say, for example, if your margin balance is $200 and you are going to get liquidated at 27,600 basically, and you see that the position is going against you. Let's say BTC gets to 40,000, right, and you're at risk of getting liquidated. If you decide to fund your account with $300 more or $500 more, then you are going to be back in business. Your liquidation price is going to turn to zero. For example, let's say I add sorry, I had 600, and you can see my liquidation price is back to zero. So this really, really helps, and it gives you an idea of what you are doing. You have an idea of what you are doing. You don't just get into the market and be like, oh my God, I've gotten liquidated. If you know the right figures before you enter the market, then you should avoid liquidation. Then, Great Man also said, you have to know what you are doing at the technical side of things, right? You have to know that, okay, this place I'm getting into the market, it's really a good position for me to get into the market. And it's not I mean, technical analysis is not 100% thing, right? You can either be right or wrong, but at least it's good to have an idea, like have a basic idea of what you are doing. It's very, very important. So Ben.
Great. Great stuff. Actually, this is actually very exciting. Thank you so much, Amek. Before I let you remove your screen, before you go, a lot of somebody particularly has been asking about how to, when to set an entry and exit point using the chat. Edit Daniel, right? So let's just help solve this person's question. I've seen the question like numerous times on the chat. How do I know when to enter into a trade, and how do I know when to exit? I think let's start with entry using two indicators that we've talked about, or two analyses that we've talked about. Either you explain using the support and resistance, or you explain using the what's the other one? The price action. Just two of them.
Okay. So basically, one thing you have to put into consideration when you are trading futures or when you are even trading in the crypto market, I want to just give you guys, especially if you are new to the market, if you are new to crypto, one thing you have to note very carefully is that when the market is going up, in fact, I'm going to start this from sports market in general, right? So when you see everybody buying a certain asset and the price is going up, you see that the asset is, let's say, 300% up or 500% up, like basically when the market is going up, then it's probably a bad idea to buy into the asset at that point in time. And when you see people saying negative things about the market, and maybe or possibly the market is just like in a decline, like it keeps on declining, then that's probably a good time you should consider doing your analysis and getting into the market as at that period of time. Because when the market is going down, I mean, it doesn't go down forever, like basic analysis, right? So it's going to eventually go up, and you can find a good entry when the market is going down than when the market is going up. So I don't know if you get that. So basically now, if you look at this chart, for example, let me use. I want to use a 4-hour chart for more detail. Okay, my network is. Well,
Mm.
but basically, okay, I'm just going to explain basically. So as Great Man was explaining, right? So basically, when the price of an asset gets to a place where, like for example, I'm not seeing a good. I'm not seeing a. I don't know why my. Sorry, let me reload.
Okay. I
Uh,
think the network is at it again. Today, the network has been
I
terrible
think
for all of us.
my network should be good. That's what I'm wondering.
Okay. But I like the way you explain things. So maybe you can use, let's see if the network is back.
Okay, it's not coming up. Wow.
Okay. Okay. Okay.
But
We'll
you
still
can
get
hear
back.
me, which means my. But basically, how do I explain? I can't draw with my.
Obviously, you'll not be able to do it without
Okay,
practicals.
great man says he can help.
Okay, great man. Let's have you up then.
All right. Entry and exit points. Okay. Let me share my screen. Let me share my screen. All right. Please confirm if you can see my screen.
We can't do.
Not
All right.
yet.
Oh,
How
sorry, I have to stop sharing. I've stopped sharing.
No, you don't even have to.
Oh,
Once he shares, I'll be able to push up.
I think on
Okay, I
my.
can see your screen now.
can you see my screen?
Yes, go ahead.
All right. So, like I talking about entry and exit points, it's important you know when to enter the market, and it's important to know when to exit the market. Now, futures is so, trading futures is risky that you don't just wake up and jump into the market or jump out. You must have a calculated, predefined, and verified entry, and you must also have a predefined exit. You get, remember, your aim is to protect your capital. One of the aims of trading is to protect your capital while you're making profit. You should not just lose money. So that means you have to be specific, you have to be intentional. All right, now back to entry. Now you only enter the market when you have a confirmation as pertaining to when to enter the market. Now I will just give I'll just give a brief example. Like, remember, I drew this line as actually my support and resistance line. And after drawing it, now let's see what we have on the candlestick chart. This is actually on a 1 day time frame. You get, so remember, for you to have an entry. Okay. Sorry, this is what we have. We can see how this is where the price is now. Sorry, this is where the price is currently, and we can see how it's actually. We can see how price got to this zone and it's actually dropping. Remember, this was the support and resistance line I drew on the line chart. We can see how price got here, came down, it came acted as a support here. You can see how it broke. It came back. It was a resistance at this point. You can see how resistance, you can see how we're still acting. You can see that this particular line now is playing a major, it's acting as a major, zone in the market right now. You get. So now, how do I know when to enter into the market? Now, let's say for example, I have this line drawn as my support and resistance line, and now is market is reacting. Okay, remember this on the 1 day time frame. Let's see what is actually happening on the 30 minutes time frame. 30 minutes time frame. Okay. Let's say for example, I want to actually enter this market. I actually want to enter this market, and maybe price is actually coming to. I've actually drawn my line. I've actually drawn this line, and I want to enter this market, and I'll actually wait to see what will happen. Maybe I was not fortunate to. I would have actually drawn another line to see where the support is here. But let's say I wasn't fortunate to enter the market as the market rallied from this point to this point. But I was actually fortunate to draw this line before price got to this point, and I want to enter the market. So I would actually wait for when the price. That's where understanding Japanese candlesticks comes in, price action and all that. Now I'll actually wait for when the price gets to this line. For example, now the price actually got to this line, and we can see the formation of this is actually a Japanese candlestick pattern. Now, like I said, you don't just because it's actually getting to the line and you see that it's actually the price is dropping, you now open a position. Now you have to actually wait for a confirmation. Now, let's assume that all this hasn't happened and price is just here. Let's assume all this hasn't happened and we want to take a position. You get now this happens, buyers are still in full control. Now we see this particular price action, and we see this. Now, this is actually called an evening star. Like now, in the Japanese candlestick chart techniques, we have various reversal patterns. We have the morning star, the evening star, the bearish engulfing, the bullish engulfing.
Great man, you are here
Yes.
you want to confuse my understanding. Even me self, I'm lost. I don't want to know about the evening star or the bearish man. I just need to know simple ways to understand how to jump into a futures trade and jump out. I think that's what Edet is trying to find out. If you give him all those details, it might be just too much.
Okay. So let me just go to the point right now. Okay, let's for example now I want to jump into a futures trade, for example, and I want to maybe enter a short position. Now, short position is that you have gotten confirmations that the market will actually go down. Market is actually going to sell. So you are not going to just enter. You have to see confirmations that the market is giving you that the buyers are getting weak, and you now the market is going to drop further. Let's say, for example, now you want to catch this particular sell move. Now you have to wait for this is actually this is a candlestick for me. This is a bearish. This is a bearish engulf. Now, after this particular formation has entered, I can place my sell order somewhere around here. I can enter a short position somewhere around here because this is actually acting as a resistance line now. You get this is a bearish engulf. Now, this is an indication that the market is going to go down. Now, a bearish engulf acting on a resistance line we actually call it confluence, but I wouldn't want to go into that. There's actually what's called confluence trading, but I wouldn't want to go into that. Now, a bearish engulfing acting on a resistance line is a signal that if you short the market, if you enter this market and open a short position, you will make some good profits. You get so if I enter this market at this position at this particular point or placed an order, waited for this candle to close to confirm it's an engulfing candle. If I had entered here, and held the trade till this particular point, would have made some profits from selling the market. So that's how you enter the market. You enter after you have a confirmation. So that's how you have to learn those skills.
I get you now. I get you. So you are using the candlesticks indicators to show us how to enter.
Exactly, with the resistance line.
With this resistance.
Line.
Cool.
Yeah, that's
so the first step I have noticed here is I first look for my point of resistance, and then I look for a bearish engulfing on my candlesticks.
If you want to sell the market.
If I want to sell, if I want to predict a downward movement in price.
Yes,
okay.
Exactly.
So before we go ahead, I think that's clear.
According to this example,
it's fine. Simpson, if I leave you, great man, you give us all the old principles in this thing. You want to bust my head. Simpson, show us how to use Bollinger Band to take action.
Okay.
Can you share your screen now?
Yes, I can share my screen. Sure. Sharing my screen now.
All right.
Can you see my screen?
Yeah, I'm adding you up
Okay.
now. Cool, cool. Very quickly, I think that's one of the easiest indicators to use.
Yeah, the Bollinger Bands. Um, I don't know what's wrong with this network.
Mm.
Can you see my screen?
It's actually loading.
Yeah, it's loading, and I would need it to load so we can use an example to use the Bollinger Band.
Okay, before it loads, just do an overview of what the Bollinger Band is and how
I think
people can easily read it.
yeah, I use two methods of the
Mm.
Bollinger Bands. I use the Bollinger Squeeze and Bust, and the 1, 2, 3 Bollinger Band principle, right? And before we go ahead, I would like to state the Bollinger Band simply indicates the momentum in the market, right? When the
Mm-hmm.
bands, there are three bands basically: the top, the middle, and the bottom band, right? So when the top and the bottom bands are getting away from each other, it indicates that what there is momentum. And momentum indicates what? Buy indicates a lot of what? Market activity, either ways, to the downside or to the upside, right? So when we get these bands squeeze, it shows that what there is less buying pressure, right? And at that time, it indicates you need to watch the market closely, because the next move, whenever there is less momentum, the next move is usually an impulsive move towards
Mm.
the
Mm.
downside or the upside, right? So
Sorry
using
to
this
cut
band,
you. Great
yeah,
man, please show us the Bollinger Band on your screen since your screen is available.
oh my god,
And let's see if Simpson can explain what he's talking about.
yeah,
Great man, just show us the Bollinger Band. I'm sharing your own screen.
okay, please take us to Great Man so I can use your screen to explain. The network today is,
Is Great man hearing us?
I think his network too has gone off. I don't know what's wrong with the network today, but
It's actually very
something
bad.
is something is really not right somewhere. My tab is
I think
just
it's a
loading.
general thing. It's a general
Yeah,
thing.
it is a general problem. Let me try to log into Binance all over again. You can see I'm getting an error message.
Okay, okay.
I think someone sorry Voski, can you share your screen if you have good network?
I just want it to be that our users or everybody on the
Yeah, let them
call
understand what we're talking
have a
about.
clear, simple understanding and can relate to it. Um,
The same error message.
okay, Voski, is it good from your side?
Yeah, let me check.
All right.
Amek, is yours coming up
Yeah.
yet?
What are you trying to access?
I
Just the
want to
Bollinger Band.
the Bollinger Bands. We need to actually set it first.
Okay.
Yeah, we'll use the settings on the bands.
I mean, like, why are you? Let me share my screen so you can explain from there, right?
Please share. Please
Yes.
share.
Okay.
Guys, we are almost done with the call. So for those of us that are actually waiting for the giveaways or for the campaign, I'm going to share a form right now for us to participate. Anybody that participates in this campaign stands a
My
chance to
YouTube.
go home with
Check
some
my
very
stats. Check my
strong
network.
rewards. Yeah, I just dropped the form in the chats. All right, Voski, we see your screen now. So, great man, walk us through very quickly on the indicator you want Voski to display and
Okay.
explain.
Bollinger Bands, please. Go to indicators. Choose Bollinger. Then we would first of all have to set it. The upper band has to be set at 5, and the middle and down bands has to be set at 2. 522. That's the setting for the Bollinger that I use. People might have different settings, of course.
Okay, so Voski, it's at the top where you have indicators, just beside the time frame.
Yeah, beside 1 week. They said, yeah,
Yeah, no, indicators by the right. Yes,
yeah.
yes.
So go to
This one,
Bollinger.
right?
Yeah.
Yes.
Okay, set it up. Length should be
Turn off for
20,
me, yeah.
should be 5.
You said?
Hello, it should be 522. Where it's 7 should be 5. Yeah.
I can only see one feed here.
Uh,
Okay, hope I'm taking the right thing. Okay, I
up
can see
up
it
should be
now.
5. Up. Yeah, up should be 5.
That's the length.
Yeah.
Okay, length 5.
Yeah. Middle and down should be 2. Yes. I think that's okay.
Okay.
Yeah. So click on.
How many minute time frame do you want?
You're using, go to 4 hours.
Okay.
Good. So now using the Bollinger squeeze and bust, right? Look at where the the lowest swing here is written. That's 0 points. Yeah, thank you. Right? You can see that the band squeezed there, right? You can see that the upper band and the down band, the lower band, they came together there to form a squeeze, right? So now you can see the next candle pushed towards the upside, right? The second candle pushed towards the upside. The third candle. Now we use the third candle as our entry because in crypto you don't just jump into market. You need a confirmation that what you are not actually seeing a fake out, right? So the third candle is the confirmation candle. So if we're using the 4 hour time frame to enter, which is like probably a swing trade, we're going to wait for the third candle to open from the squeeze, right?
Okay.
So the
One,
third
two,
candle
three.
has
Yeah.
opened above. Can you hear me?
Yeah, I can hear you.
Good. Once the third candle opens above the middle band, that's a confirmed buy order, right? Then, if you watch this chart moving from that zone, once the third candle opened above that zone, we only had a retest of that zone, and price has been what? Surging forward, right?
Yeah.
Does it
Yeah.
make sense?
Yeah, making sense.
Good. So also is it to the downside, right? Now, when you have a squeeze and then an impulsive move to the downside, you wait for a confirmation, which is the third candle, which will open going downwards, right? If the candle opens below the middle Bollinger Band, it is a sell, right? Then you open a sell order, which is also a short. You enter a short, and whenever you see a squeeze, if you like try to go back and do your analysis, just go back, let's test. Okay, let's try out, let's look for where there was a squeeze and prices went downwards.
Yeah.
Like most squeezes happened and prices went up, but
So
okay. But on the long run, right? On the long run, that is how you use the Bollinger Band. But before we go forward, I want to state that what no analysis is crested in stone. Analysis could get invalidated any minute, right? Analysis
yeah.
could get invalidated any minute. So the fact that analysis, basically technical
Um,
analysis, is what is a prediction, right? We're just doing probabilities. We're looking for the most possible outcome, right? Not the definite outcome. Yeah. So we could see the Bollinger Band squeeze and bust could play out perfectly. And what will happen? There might be a food somewhere, right? USA might ban something, Russia might do something, and then prices just plummet, right? Like look at what happened during the El Salvador adoption, right? BTC dumped from 52 down to 43. So it didn't respect any lines, right? It didn't respect any. I was in a trade. The team broke through 3 support lines at once. So you get to understand that if you say that, okay, this analysis is, yes, this is what I'm saying, this is what I'm saying must play out. No, right? We just go with the most probable band, and that's why we use risk management. That's why we manage our funds to make sure that, well, even if analysis doesn't go our way, we still have something to fall back on, which is our capital. There is still something there for us, and with proper risk management, we can always be in trades, no matter the side which the trades go, right? That's how you use the Bollinger Band, squeeze and bust. I would really
Great.
love to talk about. Sorry, are you there, Mr. Ben? Are you there with us?
I'm here. I'm here. Don't bust my head. You want to bust my head? It's okay.
so so
I think we want to look at a few. I think that's basically what we can take for the call today, because we don't want to
okay.
spend too much time on the call. But I know that there are a lot of questions that are actually coming in the comment section. Most of them have been answered silently in the conversations. What I did is form. I've dropped another form for everyone who wants to participate in
They are complaining that the forms are not online.
I just dropped it again.
They don't.
Oh, this is saying not found. Give me a second. I'm trying to sort it out internally.
Ben, I forgot to say something. Can I go?
Please go.
Yeah, so when I was talking about how to avoid liquidation, the thing is, let me say 90% of people that do trade futures actually, like, if you are trading futures for the first time, if it's the first time
Huh?
you are getting into the market, you are at a 90% probability of getting liquidated because you don't have really sufficient knowledge about the market yet. Which is why it is important that if you want to start trading futures today, like if you want to start today and you have never traded futures in your life, please use $10 or $20 to try out the market first. I'm not saying you shouldn't learn about futures, but at least try it with a little amount, right? Don't go and carry your house rent and put it into futures and say, okay, you want to figure it out. You will get
Mhm.
liquidated. Oh. So just try to put a little amount, try some features out. Okay, like the Bollinger
Mhm.
Bands, this, the that, the RSI, this and that, whatever works for you. You can watch some YouTube tutorials and try it out with a small amount of money. When you have a complete understanding of it, don't go to $1,000 nonetheless. Go to $50. After $50, you get to $100 gradually, gradually. If you jump all at once, or more.
Mm.
You
So
go be careful.
please, let's try, guys. I have shared another link to the form. I just opened the form on my side and it's actually opening. So if you have not tried again, I'm dropping another link to the form. Please, guys, use this last link before we leave the call. This form is for you. It's going to enable you to participate in the $2,000 giveaway, or a promo. Right? All you need to do is to trade on the Binance futures. The top trader would get about, actually it's kind of like a very big volume. So a whole lot of winners will be a part of it. It's kind of like Binance Futures second year anniversary promo, and it's a global one. So you want to participate as much as you can, and it's based on trade volumes. I'm going to drop the link one more time for our users to begin to play around with it. Guys, I must appreciate every one of you for your time. Some of you learnt about this call in a very short period of time, and you still came out. Thank you so much for making our time to be on the call. Once again, this kind of calls is something we put together we hold it bi-weekly or weekly or sometimes monthly, just to share some educational resources around our Binance products with our users. Right. So we look forward to having such another interesting session like this in the near future. Meanwhile, thank you so much. Does anybody have, before we go, let's just do maybe 30 seconds final words for traders and users alike. final words. Those of you that know how to give advice, don't give advice now.
For me, basically have an understanding of the spot market. Do some trades on the spot market before migrating to futures. Don't just jump anyhow.
Sure, sure.
Sure.
Thank you so much, Amek. Great man, you're next. Great man, go ahead.
All right. So all I would say is, trading is a gradual process. Try and take it slowly. Ensure you're learning every day, because the more you learn, the more you're able to understand the market very well. Remember, you cannot have what you don't understand. You cannot use what you don't understand. Yet, so just ensure you're learning every day, and see you at the top.
Great. Thank you so much. Simon, go ahead.
Okay. Basically, whatever you've learned here today, man, I would advise you back test it. Back test it. Take it, go back on your chart, look what happened in the past, then try it out. Right? Try and error. Try it out with very little funds, then see how well. Develop your strategy, whatever you've learned, fine-tune it to fit your own trading strategy. And man, the only way is up from there. Even
Great,
though we'll go
great.
down.
Thank you so much. El Priest, do you want to say hi to us? I know the network was not nice to you today. Sorry.
I'm sorry for not being able to contribute to the whole thing. I've been having issues with my network. Well, my own simple advice is just keep learning, because and try as much as possible to get a mentor, someone that will put you through, to avoid learning the hard way, because futures can be very, very harsh on traders. So that's my little advice for guys.
Great. Thank you so much. All right. Voski, conclude before we say buys.
Okay. Um, well, it all still boils down to the learning and constant practice. Okay. You can't get fully acquainted to it if you don't practice it. And while practicing it, please manage your risks very well, manage your money very well. Okay. Don't start with 20x, don't start with 15x, even 10. Start small. Maybe start with like 5x. Highest as a newbie, highest you go at 5, 7. Okay. And then start with little capital. Okay, then when you get a hint, when you get a taste, when you see, you have had a first time experience and know this is how this works, and then you can be able to go big. Okay, because
All right.
futures is really risky. Okay, crypto trading is general, but generally is risky, but futures is more, because in any drop down, if there is any time of like high volatility, it usually affects futures traders the more, because a lot of positions will be liquidated. Okay, a lot of counter trading will get wiped out of the market, and you lose your money. When you lose your money, you now lose your sense of reason and all that. So you want to keep yourself sane, you have to trade so that you can be able to trade another day. Okay, you trade to preserve some guys so you can be able to trade again. You don't just trade the whole thing in one day. All right, so that's just my own little piece of advice. And as Esprit said, try and get a mentor, try and look for, try study. Okay, go on platform, YouTube, learn from others who have been into it, because they have had experience and they know what to do. They know the crook and crumbs. They know how to. They have like proven strategies that helps them hedge their funds in general trading. Okay, so it's all about determination and consistency, like that. So that's just all I have to say. Okay, you learn first, then you earn. All right. Ben is off.
Seems
I
like he's
don't.
getting
Yeah.
I guess
Network
we
is
are
I
done.
fine.
don't.
one
Yeah.
another thing that newbies do a lot. I have a lot. There are a lot of newbies that come to me for advice, and I will see someone entering a trade for the first time with 125x. They want to become Elon Musk in one day.
Wow.
I've
Yeah,
seen
so
a
people
guy
have been asking about the video.
5 trades with 100x, and I was like, guy,
Wow. And you know the funny thing, a lot of people jump back to say, Binance has taken their money. Remember I mentioned at the beginning of the call that when you get liquidated on futures trading, it's the other person who is trading the opposite direction of your trade that gets rewarded, right?
yeah,
So it's
Yeah.
kind of like a prediction market.
Right. More like
Um,
the longs pay the shorts and the shorts pay the longs.
exactly the point. Exactly the point. So
And you know,
when
most
next you
and I'm sorry, most of the time, you know, they expose themselves to so much risks. You imagine somebody
Mhm.
with an account size of $100, you are trading with 125x. As if that's not enough, you are now using 100% of the $100. So it's not that you're
wahala.
using 2% of the account, or maybe 1% or 10%, 100%, 125x. And
The, the,
you're
the thing
wondering
is,
why you keep on getting
the thing
liquidation
is,
calls.
even if the trade goes in your favor, you will end up losing the money the same way you made it. Like,
Yeah.
you are being careless, so you will lose the
Very
money at the end
true.
of the day, even if you do make
Very
money at
true.
first.
Crypto Ben said he will start with 100x. Please, oh, we are not the one that
Hmm.
advise you to start with
Ah,
100x.
You do not,
please,
even
so
1xf is too much when
please,
you don't know what you're doing. As
if
long
you
as you
don't
don't
know
know
what
what
you're
you're
doing,
doing,
just
you are putting yourself at risk. See, it's just like, for example, now you are driving a car in the night and you are
without headlight.
blindfolded and your headlamp is not good, driving on a road that you haven't driven on before. That's the same thing. Trading futures,
Very
you
fast.
basically don't know anything about the market. You don't know how to do technical analysis. That's exactly what you're doing. You're
Um,
driving blindfoldedly, and you might actually
uh,
crash
bas-
into a
basic,
ditch, or so
basic,
have the knowledge first before you venture into the process.
basically, for those that have knowledge of forex, it's not so much different from futures. You just have to learn one or two things. It's very similar. Forex market.
Thank you so much, everyone. I know talking about cryptocurrency is like our calling, our second calling. So we can always talk about it for 24 hours. But I'm very excited that you guys were able to be a part of the call. We'll have subsequent calls like this in the near future. Thank you so much for your time. And thanks to everyone who joined us. Thank you so much and have a great time. I'm dropping the link once again. Bye, guys.